Good day, everyone. Well, we see that the NASDAQ is just a breath away from its 200-day right now, with the ECB saying that they're going to become even more print-friendly in terms of easy monetary policy. That's caused the European bourses to rally and the U.S. as well. So, yeah, we're just talking that, this market has some predictability in terms of a day-to-day basis. I mean, the market is up 1.5% on the NASDAQ right now, and it's very close to the 200. And I mean, this is to me one of those trades where, I know there's some friends of mine, they go big on things like triple Qs and whatnot, and this would be kind of one of those idealized trades where everything's kind of sitting up just right. Because in other words, when the NASDAQ hits the 200-day, it's going to be up close to 2%, and I really don't think it's going to have a lot more juice after that. So I think that is going to be a point where we start to see people put on short positions for people who do that sort of thing. We, of course, we're focused on the stocks as well. There's all kinds of ways to skin a cat, and our favorite way is with stocks, especially in a market like the one we've had this year, where the only opportunities, or I should say the few opportunities, have been in individual stocks. We have had a number of names hit our screens, which we have made known to all members, but a lot of these stocks haven't really gotten going, or they've been just kind of backing and filling. And the first one I'll mention, there's only a couple that have actually done well. The others have just, like I said, they haven't really done anything, or you were forced out of the position because they just didn't act right. But first one is MANH, M-A-N-H, and here's one we put on the list, and it. Wait a minute, one second here. I want to get to the daily chart on this one. Okay, here we go. Wait, this one, we need the daily on this one. This looks like the 5-minute.
It's right here,
okay,
Dr. K.
Great. So then we put this one on the list a few days ago, and it's done well. We put the pocket pivot on first, and then it had the viable gap up, which you mentioned yesterday, and so in context with the chart, I mean, if it just, in context with this chart, the stock looks like it's doing the right thing. If this had not been a viable gap up, then it would have gotten ahead of itself yesterday, and you might have taken its profits. But in context of the viable gap up, it looks fine. We also have IPHI, and that one has gotten a bit ahead of itself. Just in a few days here, we're seeing some profits, some pretty decent profits in it. And you can see, it's just kind of shot up out of there on that breakout. So that would be a stock where you might think about taking some profits either yesterday or, well, yesterday it had a gap up at the open, so you wouldn't take profits there necessarily, because that's a sign of strength. But the way it closed, and now it's trying to head back up, there's nothing wrong with taking something off the table here. And again, in context with its overall chart, it looks like it's getting ahead of itself. The overall market, where is it going to go? Well, obviously the central banks like QE. They're addicted to the morphine drip, and they are going to continue this type of activity so long as the global economy remains very weak, or at least before it starts to really show signs of a turnaround. And therefore, I think we're going to be living with QE probably longer than expected. The U.S. turned off the spigot, of course, but it's not. I think this whole business about it tightening, I think, is nonsense. I think it's just Fed speak, and ultimately, they're not going to be tightening anything until, again, the whole global economy starts to right itself. So the Fed may maintain this easy money policy, but with no QE for well into next year. If things get worse, if the market starts to have serious correction, I wouldn't be surprised for them to step in with QE4. So yeah, like I said, I think QE is here to stay for the duration, and some of these guys, have said, made predictions a couple of years ago that there's not going to be any tightening. In fact, there's going to be a lot of QE. We're going to be swimming in QE for the next couple of years at least. What was it that guy Bill Gross, I think, said 2017. That was his projection, which doesn't seem an impossibility. It didn't seem then because things were actually within the system quite rotted out. So we are headed to 2017. That's only about a little over a year away. As far as commodities, gold, etc., oil, if we look at the USO charts, we see. If you look at USO, then you'll see that it's starting to roll over again. So there's no definitive bottom that it's put in yet, not according to this chart. Commodity Research Bureau is kind of lock in step with the price of oil, and it too is rolling back over. So, well, we've got the NASDAQ up over 1.5%. As I said, this is when it's like this and it's that close to the 200-day, it's probably not got a whole lot left in it. But I like days like today because you have high probability events, and we all know high probability events you can make money off of, and they don't happen too often in this kind of market environment. So it's a nice little gift and entertaining at least. With that, I'll turn it over to Gil.
Entertaining indeed. I think I don't know. All I have to say is it's nice to be short this stock on a day like today. I shorted this one yesterday, and I kind of forgot they came out with earnings this morning, and so they opened it up somewhere between 99 and 101 or 100 and 101. So I just shorted a bunch more, and it broke down. So you couldn't tell, looking at that, you couldn't tell that the market's up 220 points on the Dow. But my tendency is to look at it as a possible short sale opportunity. Volume is pretty good right now. We'll see how this pans out. You can see in the NASDAQ, you're just stuck in this range. You're still under the 200-day moving average, so we'll see what happens there. But they're pushing it pretty good, and I think it's almost comical that it seems to be based on, well, number one, you had Caterpillar coming out this morning and lowering guidance and confirming that the global economy is weak from their perspective. But you had the ECB, you had Mario Draghi talking about how some of the members on the ECB board, I guess, were leaning towards acting in terms of printing more money. So, really what you have is a market rallying on the basis of the Fed not raising rates and the ECB printing more money, and the Chinese are in there printing more money. So everybody's printing more money. It's just a money printing festival, and that's pretty much what you got. In the meantime, I think you're just looking at a scalper's market. I look at some of these stocks. I've been working on the short side. Like you look at Palo Alto Networks on Monday, rally just above the 50-day reverse, so it could have been shorted there. Breaks down to the 200-day. You cover there. Now here it comes flying back the other way, almost in manic fashion. I mean, it's just to me the movements are almost bizarre at times. Like another name, I noticed with that breaking down, okay, you start looking at the whole group. That's usually what I'll do. If I see something acting weak, I'll look at the other names in the group. Like with the UA, my thinking there that it would be weak is because you have Dick's Sporting Goods is pretty limp there, and you have Lululemon, or is it Lululemon, whatever. This also has been weak. You notice it's in a bear flag. It rallies to the top of the range and then comes back down. So it could have been shorted up around the top of the range. But, that's what you're looking at. And you can see the zigzaggy action in pretty much everything. Another one that was a good short off the 50-day on Monday was Fortinet. It broke down, undercut these lows. So that's kind of a short-term cover point. They come out with earnings today after the close. Somebody upgraded it or something, and now it's rallying back to the 50-day. Maybe it comes in before the close. Maybe it blows up after earnings. But I noticed the cybersecurity group is weak. Retail names have been somewhat weak and dicey. And it's basically just a choppy, crazy market. There have been some breakouts that are inching higher, but I wouldn't call them necessarily, hot stuff that I'm going to buy and make a huge amount of money on, I don't think, but we'll see how all this pans out. I mean, are we on the verge of a glorious new bull market? I don't know. All I know is that you can basically short-term trade things and look for setups and then hit them and run away, and that's good enough, you know. But really, making big money is hard when you're trying to play this way. I mean, you can inch ahead and you might get hit, you know, go for a couple days and get hit one day, and you're kind of 2 steps forward, 1 step backward. And really, the way to make big money is to be able to buy stocks and sit with them for a decent upside move, and you're just not really seeing any of that other than things that are coming up off the bottom, like the security brands. You had the pocket pivot here off the 200-day. Now, to me, that seems like a lower probability buy point, but this thing just launched from there, and it had another pocket pivot yesterday, and it looks like it's still going higher. So maybe this is the glorious new leader that everybody's looking for. But the one thing to keep in mind here is that it's already done that, and you're getting this loose action that is, I don't know if this is really the type of base that it's going to come out of that you would consider a constructive base. It looks more like a breakdown pattern, and at best I think this would need more time. So it's come straight up over the last 4 weeks, so it looks a little bit dicey on that basis. Take a look around here. You can see Tesla's been weak, getting bombed, rallied right to the 200-day on Monday, short right there, boom, it breaks down. Our price target on this is still 180, basically this low on the weekly chart down here, and you can see this is a pod sort of formation, not a deep one, but it is a pod in the sense that it's a late stage, big ugly base, and then it breaks down, you get a rally back up, which sets up this. I think this occurred right here, and then we put it out again as a short on October 1st in our pre-market pulse. You had a little rally to short into, and then boom, it's breaking down. This thing I think is toast. So it's, in my view, it's done. Let's see. Here's an interesting one. F5 Networks. Okay, taking its time. Yesterday was a short at the 58. It breaks hard, and then today it's back up to the upside. Go figure. Facebook is interesting, I think, because it reversed at the 100 level. I actually bought this pocket pivot. I figured it would work for a move to 100 based on the fact that it wasn't really all that obvious in terms of not having enough volume. So your standard base breakout buyers would buy this, would not buy this because volume wasn't, you know, 130% of average or whatever it's supposed to be. And so it ends up working, but it hits the 100 level and reverses on heavier volume. So at that point, it was a matter of flipping out of the long and then going short for a quick trade. Now it's trying to lift up again, and I kind of watch it here on the 620 to see what happens. There's really nothing going on just yet. Somehow my sense is this is going to be the mother of all shorting opportunities. The thing is, though, I think you kind of have to lay back and watch and see how it plays out here. You know, if you're working something like this, obviously that makes it a little easier. I don't know why my e-signal's gone to sleep, but again, it's just kind of the way this bifurcated, funky market is acting. Netflix is another one that has looked like a short. On the shortable gap down, on the breakdown after earnings, and now it's in this sort of bear flag. The 100 level seems to me to be potential resistance. It failed there yesterday, so I kind of like this as a short coming up into the 100 level. I do have some out here. It did get up very close this morning. I actually hit it, and we'll see if this thing rolls over. I don't see anything to buy here. I mean, you're not going to chase this huge rally on the gap up. I mean, you could bought Facebook this morning, maybe get a buck out of it, or Apple, I suppose, because you know that if the market's going to jam, those are the big stocks that they're going to push. Other than that, it's, you know, little this, a little of that. Fit was actually, I think maybe I talked about this last week, but it's set up and had a nice move. I played this one, you know, but once you get up to this area, you know, that it's a short-term trade. You get what, 10% or something? Take it and run for the hills, and that turned out to be a good strategy because now the stock is broken down. It's trying to hold along the 50-day line. But I think for the most part, if you're looking at earnings coming up in a stock, it's difficult to decide whether you're going to hold through earnings unless you space like I did on UA and forget that they announced earnings this morning and you go and short it yesterday. I thought they were announcing next week, but oh well. I'd rather be lucky than good sometimes. Let's see, I don't see any questions. Is everybody sleeping this morning? Are you just sitting there in awe of this rally with your mouth agape and just not really sure what to think? So I think, well, as Dr. K said, I find it somewhat entertaining, but not unusual. And I'm just watching to see if it turns into a short selling opportunity, because that's what I'm leaning towards. I think we are going to break down at some point, but it's a matter of when this gives out. And when you think about it, this really is just a big ranging downside consolidation. You know, I guess you can get excited about follow-through days here and there, but the net effect is you're just chopping back and forth in here. So you get short selling break here, then you get this rally where maybe you can play some junk off the bottom, and I'd say most of the stocks moving are junk off the bottom. What are some other ones that are acting well, Dr. Like this one is hanging in there. You show the IPHI. Starbucks is actually acting okay. Had a pocket pivot there, and it's holding up, surprisingly. That's like the stock that just doesn't want to die. But they're everywhere, I guess, and there was some article, I think, last week about them being able to produce infinite growth. I don't know, you got to kind of get wary when you start hearing stuff like that. Let's see, how would Richard Wyckoff trade this market? I don't know, go ask him. He's dead, though. I mean, how would Richard Wyckoff trade this market? What you might try doing, instead of asking a question like that, which I have to say is kind of silly, you should read up on as much Richard Wyckoff's material as you can, and then you'd be able to answer the question for yourself. But obviously, how did he trade? He paid attention to price and volume action, and the price and volume action is shifting back and forth. So from my perspective, I can tell you how Gil Morales trades this market. It's like I see something like this, and I hit it on the short side here, and it breaks, and I cover it. And I see something like this, and I short it here, and it blows apart, and now it undercuts this low, so that's a cover point. You know, I see a stock like this, whoops, and I shorted as close, actually I shorted on this day on the rally back up to the highs of this shortable gap down, and it comes down a little bit, but it's not anything I can write home about just yet. I see a stock like this setting up here, the volume's drying up right here along the 20-day moving average right there. You buy it there, boom, you get a 2-day pop, and you sell into it. So that's how I trade that. What else? Cyber. You know, it stalls out here right at the 50-day, boom, it breaks down. Mobileye. Here's another one. Rallies right to the 50-day. Now this is a classic pod. You know, big IPO, comes down all the way back up to new highs. Looks like it's going to break out right here on the daily chart, and then it blows apart. It gives you one shorting opportunity right up here as it breaks. It breaks hard, you cover, rallies again to the 50-day, you short it again, it breaks again, and then you're kind of fluttering around or fluttering about, and you're starting to roll over again after rallying all the way back up to the 10-week line or the 50-day on the daily chart here. So that was a short on Monday right there, and if you shorted it, you're up, you know, 6% or so, 6-7%, and you're having a good time. Somebody says CMG could get near a 200-day. That's a juicer. Yeah, that's a shortable gap down, I think. Of course, you would be stopped out today, but this looks like you might be able to short it and use the 669.11 and 669.11 high of the day as a stop. So another one that I shorted the other day was Google, and Google's, remember I was talking about this, here's the base, and look at how just funky and loose that is. You know, there's no real tight closes in there, maybe a couple right here, but it's just loose, okay? And so when it gets up here, I see it up there, and I'm thinking, okay, Livermore century mark rule in reverse. So hit it there, keep a tight stop, and kaboom, they nail it. And it gets knocked down to the 20-day moving average, and it bounces, which makes sense. Now you got earnings coming out today after the close. We'll see what happens at that point. But you know, I don't know. Some of these rallies, some of these stocks that are acting well, starting to come off. Google's one of them. Amazon also comes out with earnings after the close, but it's acting okay. But you know, anything could happen after the close. Flip a coin. And it's one stock I wouldn't mess with in terms of holding overnight into earnings because it could jack 100 points on you. So somebody's asking, if I don't own a decent performing stock yet like Starbucks but want to, is it a good strategy to buy options before they release earnings next week? Don't ask me, I don't use options. So I don't know. If you think it's going higher, it's a good strategy. I don't understand how something can be a good strategy unless you've already determined which direction you think the stock is going to move in. So if you want to take a flying leap and you think that the stock is going to go higher after earnings, then I guess you would buy calls, and your risk then is the price of the calls. And if you think it's going to blow up after earnings, and you buy puts, and your risk is the cost of the puts. But how do I know if it's a good strategy unless it moves in the direction? You know, if you're trying to limit your loss to a few bucks or the cost of the option, I guess that works. But you know, that's kind of a stupid question. Sorry, but is it a good strategy? You know, it's like asking, if I buy a stock, is it a good strategy? Well, if you think it's going higher, you know, if I short a stock, is that a good strategy? You know, well, if you think it's going lower, it's kind of a question that doesn't really have an answer, if you know what I mean. So anyways, you get a little the Gilmo tough love there, sorry. Microsoft is a break. But look at the weekly chart. It's just zoop back and forth, and now you're at the highs. I don't know. Do you go along this thing? I don't know. I don't know. TXN, somebody says Cat, Microsoft, TXN, yeah, TXN moving higher. That helps, definitely. Helps the market rally. Cat, let's take a look. Cat looks shortable. Well, Cat was probably short a long time ago. If you look at it, it's had this sort of funky rolling head and shoulders and then blew up here. And now it's way down here. So I don't know, maybe it's too far down to short. Comment on Nike. Nike, well, I don't know what I'm supposed to comment on. What do you want me to tell you? It's way up there. There's no buy point. I guess if you own it and you bought it maybe in here somewhere, there were no real buy points in here. I'm looking along. Hard to say if you would call that a pocket pivot. But it's just trucking higher, you know, and looks okay. So if you're trading it, you know, I don't know what you're going to use as your trailing stop. So I don't really have any magic message there. Texas Instruments is that a viable gap up? Hey, Dr. K, would you buy Texas Instruments as a viable gap up?
It's not the kind of stock that we're interested in because of its price volume characteristics. It's not a fast mover, and
well, and look at the position in the chart on the weekly. See that?
Well, it just, you know, it's not a high quality viable gap up, even if it were a fast stock. So it's got a lot of defects, and yeah, it's just not something we would consider.
Yeah, so if you wanted to try it, I guess your stop would be the low of the day if you think it's going to go higher. Maybe it does. I don't know. In this market, crap goes higher, junk off the bottom goes higher, and other things don't. And it's mostly a crappy junk off the bottom type of market, you know. And that's what I look for stuff like that. G Pro was even one that was a good trade for a couple of bucks down here, and it rallied up to the 20-day in reverse. And it's got to get above the 20-day though before it can really probably get going. But the earnings come out I think next week, so you got that to live with. I think with most names, you have earnings to contend with, and I think though that the real key point I would want to make during earnings season is that sometimes it sets up a very nice opportunity. Like UA, I thought even if you didn't have to put this out short yesterday either, because they opened it up. Let me see. Where is that 620 chart? Here it is. You know, they opened it up this morning. It actually pre-open. It was trading up around 101, 102. And then even before the opening, it was above 100, and they opened it up somewhere in here. You get a little blip, I think, back to, I guess, was this right at the opening here? Yeah, I guess so. Right up in here, and you could have hit it, and then boom, the thing just comes apart. So, you know, you can wait for the earnings report and see what happens. Yesterday, I noticed Biogen gapped up, and you notice what it does is if you're watching the weekly chart, and there's actually one guy who tweeted me or something, and he was aware of this, and he actually hit it. But you can see it runs right into the 10-week line here on the weekly, and it's just a little bit short, like 1% short of the 50-day line on the daily chart. And so if you saw that, you could have put a short out using the 50-day line as a pretty quick stop. And let's take a look at how this played out. But what happened yesterday is it ran up, and then it started to fail here. You got a 620 sell signal right about here, I guess. You could have been hitting it earlier because the MACD was already starting to weaken here. You see this, how it was negative just around the opening, and then you got a cross here. So you could actually hit it on this as the price started to break down, and you would have gotten a nice trade. But then later on in the day, you get a 620 buy, which is telling you to cover, and then it ends up closing about mid-range. And so it's sort of, I think it's about, maybe, I guess it is just about mid-range on a huge amount of volume. So maybe it's going to roll over here and head lower. But that would have been a good scalp if you were awake for that. So, I think those are the sorts of opportunities you get in this market. And you have to be very alert to them. You sort of have to be mapping things out ahead of time. But I would be watching for these gap ups into earnings that might fail. Rather than looking at a viable gap up, say in Texas Instruments, I'd be looking at a small gap up of $1 or $2 in UA. And you nail it, and look at this thing still getting hit. I'll cover it, and it'll go down another couple of bucks before it turns around, just to piss me off. Guaranteed. Guaranteed. Netflix coming in now, I notice. But, it's a tough market. It requires a lot of work, a lot of effort, and I kind of feel like, I don't know, to be up, I'm up like low double digits, and just to be up that has really been a lot of work. And earlier in the year, whenever you had this choppy action, but early in the year, whenever I started to get ahead, I would place a couple of big bets, and bam, I'd get hit on them and give up, when I was starting to make good gains, and I thought I'd have a cushion to work with. It almost seems like you have to take this attitude of okay, you're going to inch forward and you're going to take what you get and then hang out and wait for the next little trade rather than thinking you're going to pile into something and make big money. It's very erratic, and you can even see, yesterday was a kind of a weak day that the market looked like it was up, and then it reversed on heavier volume on the NASDAQ, okay? And so that looks like you're going to roll over, and then what happens today? They just gap this thing up like a banshee, and it's furious. The buying is furious. Like, is this for real? Who's buying this? Are like all the retail clients out there calling their brokers and said, oh, I got to get in the ECB. 3 members were leaning towards easing some more, so I got to get in. The Fed is keeping interest rates at 0, and they're talking about going to negative interest rates now. Get me in. Who's buying? Is it just a bunch of machines, and is it for real? I mean, what's your take, Dr. K? Do you think that there's really true accumulation of stocks in this market?
Well, there's a lot of money sloshing around, and they, the saying is that with interest rates so low, the money's got to go somewhere, and it prefers to go into higher risk, higher returning vehicles like stocks. So I assume that's part of it. That's part of the factor that pushes stocks higher. Because also in Europe, they have been practicing negative interest rates for a while as well. And then there was talk that the U.S., having seen that it worked in Europe, now the U.S. is on the bandwagon that they too might go negative at some point if they have to.
Right. Yeah, I mean, so it's probably an asset allocation sort of thing. They just got to pile into something. It's like a friend who's a broker. I was talking to him over the week. He's like, well, I don't know what to put my clients into. Do I put them into stocks? Do I, bonds? Or if rates start moving up, bonds are going to get clocked. You got all these states that are on the border of insolvency, Illinois, California, even though they pretend they're not. Talking about, looking at the way Jerry Brown wants to spend money. But so the brokers are kind of frozen, or he's frozen. He doesn't know what to do in terms of business. And I think if clients want to get into the market, and I guess they can bring them in. Hang on a second here.
Yeah, well, Gil's
You see Apple breaking here? Oh, I did it already. Go ahead. Go ahead. You got something to say?
Okay. Make a quick mention that just like clockwork, so the NASDAQ goes all the way up to 4918.47. That was its high for the day, and then it does an about face, and I love that. It's the very high probability event. These events tend to work because they are high probability, and in this kind of market environment, especially with QE since 2009, it's pretty much knocked out a lot of high probability events that used to work prior to QE. So I like days like today. They're like little gifts. That's why I mentioned it at the beginning. And if someone said, well, it didn't hit the 200-day, well, of course it's not going to go perfect according to plan, because a lot of people see this. So yeah, I'm not surprised that it would actually miss hitting the 200-day by a few points, because there's already people probably jumping on to take advantage of this event.
Yeah, if you look at some of these,
is it going to come? How much is it going to come off? Et cetera, et cetera. It's a strong day. I think I don't like to make predictions, but wouldn't be surprised if we're finishing up obviously for the day and we're up above 1%.
Yeah, and I'm noticing you're seeing breakdowns. Dr. K, you're seeing breakdowns. Look at Apple. Suddenly in the last 10 minutes broke down. So I got 5,000 shares short out on that turkey. And roll here. Facebook, Netflix also, which I've been shorting on this rally up to 100, is now rolling over hard and up 42 cents. So there they go. Somebody's asking, let's run through some questions. This market seems to favor the job strategy. Yeah, it does, but they're short-term trades. They come and go, and that's pretty much it. And you got to take them. The idea that you're going to invest in some longer-term trend, smoke a pile of weed and maybe you'll convince yourself of that, I suppose. Or drink 10 martinis or whatever suits you. Somebody says there's a delay with charts coming up on the screen. G-Pro just came up. G-Pro just came out. Well, okay, that was a while ago. There might be a little delay. Have you ever seen a market like this? Yeah, I've seen markets like this. Go back and look at 2008. 2008 in October was crazy, and I remember we had movements where the market would be up a couple hundred points and then go down a couple of points. Anybody remember that? Do you remember that, Dr. K?
Absolutely. That was nuts.
Yeah, and right after the top in March of 2000, you had these nutty breaks. You had a break and then the V-shaped rally off the lows, I think a couple of weeks later, and everybody said that was the bottom, and then the market just blew apart from there. So yeah, it's a crazy market, but I wouldn't focus on necessarily whether it's this or that kind of a market. I would focus more on what the stocks are doing. But I think we're headed lower. I think we're starting a bear market. If I have to make such predictions, and I know people love that, of course, it always puts you in the position of being wrong, which could very well happen. But I just don't see where the major thematic. What is this guy? Get out of my face here. Where's the major thematic action that's going to the stocks that are with the big themes, with the big stocks, businesses, and all this stuff? Where is it? It's not here. So I think when we start to see that again, and
commercial, the money's commercial. Where's the beef?
Yeah, where's the beef? There is none. Yeah.
But it's QE themes that keep this thing going, and that'll be interesting if we have another 2 or 3 years of this. I question actually whether we might not see a repeat of like a Japanese situation where you got all this money printing going on, say for the next 2 or 3 years, but we see more of what we saw this year with a market that just can't get going. And if that happens, that's okay, because this year has had profitable opportunities in certain names. So money management has been never more important, because how you trade your winners makes all the difference. And we've had some this year, like the SKXs of the stock universe, which certainly makes all the difference if you handle it right. And of course, that means cutting your losses when things aren't going right and being very quick about it. So I think this is the kind of market that really hones a trader's skill sets in terms of money management and how to buy and sell stocks. So you make it through something like this, and then when the weight comes off, whenever it does come off, and markets start to become a little bit more user friendly, then you're going to have all these skills at your side. In other words, tough markets are actually a gift in the long run because they make better traders out of you.
Okay. Let's see. Somebody asked about Netflix. Explain your thoughts on Netflix with the 620 chart. Well, I already talked about the fact that I'm shorting the rally into 100. So I'm not really paying attention to the 620 chart, and now it's breaking down. I short stocks on the basis of two things. If a stock's in midair, like let's look at something like today, this thing is kind of, well, it ran close to the 10-day, but if it's in midair, then I'm using the 620 chart to perhaps to help me short it. Now, what you see here is, in here, you've already crossed on the MACD lines, but the histogram is negative too, okay, so it's reflecting the cross. But the stock here tries to break out. Now that might be a spot to look at shorting it, and now here it comes, it's starting to roll over. You haven't gotten the full-on cross here. That may come later, but I think it is an example of something that's more in midair on a bounce off the 200-day, because my thinking is this thing eventually goes through the 200-day, and we're going to test this low eventually. Emphasis on eventually. I don't know when, but Netflix in a same sort of situation, but only in the sense that I'm using the 100 level as my reference point. So it's kind of in midair. So you could use a 620, and there's a couple of ways to do it. You can wait for the cross. Some guys I know, as soon as it breaks the 6 or the 20, when the price breaks it, they'll short on that basis. But the other thing to keep in mind is it's not some magic system. It's just a reference point. And if you study how stocks act around this chart, you get a sense of how to use it. And certain stocks you may want to work a certain way compared to others, depending on the individual stock. So 5%, not. That's been my story this year. A few wins, they get hit by a big downside move. Yeah, I mean, it's one of those. I think if you're up this year at all, you're probably doing pretty well. So I'm happy to be up. PMs are chasing the market higher to make year-end numbers. That could be too. What signal is MDM on right now? I think it's neutral, right, Dr. K?
Yeah, it's on cash.
Someone says, when you say midair, you mean signal is between two MAs? Yeah, between two moving averages. So, I mean, you could say that Netflix is in midair, but to me it looks like also it's in a bear flag. It's ready to break out and head for the 200-day, and that's kind of what I'm playing for here. So, and then, I mean, let's look at something like Facebook. This is a little more unorthodox. It's sort of a hit-and-run type of thing. Because I'm long it, and it runs up, I sell, and then I go short, and you get a couple of quick bucks on the downside, a couple of percent, really. And now you're drifting back up. Volume isn't particularly heavy, I think, for this time of the day. Let me check real quick. Oops. Get rid of this filter. Minus 11.6%. So it's drifting on lighter volume. So I'd be watching for this to roll. And I'm using the $100, a failure at the $100 price level, which is where it's failed before, okay? And we've seen this happen with a lot of other stocks. They'll fail at a century mark, and so that becomes a spot where I want to short them. So, or where I'll try and short them. And that worked recently pretty well with Google, right at the 700 level. So I'm always watching this. I was looking at Priceline too last night, and that's kind of at the, run up to the 1400 price level. Now this is almost like a big, look at how this is this big, ugly, improper double bottom, because the second low is below the first low, but it's moving higher. And it wouldn't surprise me if this thing kind of blew apart. Netflix going negative now by a penny. Oh, now it's up 4 cents. Forget it. But you see that, and this to me, maybe the 1400 level becomes a reference for resistance, and it's going to blow up from here. Earnings come out when? Let's take a look. Whoa, what was that? 11.9. So, all right, let's see if this market starts to give it up. It's hanging in there. It's still holding up, which I think is kind of interesting. Dr. K, is the VIX model in cash right now?
Yeah, they're both in cash at the moment, but the VIX is everyone. Well, I'm gonna do a formal write-up on it when it does go live. It's still in beta, but I put some pretty key risk parameters into it that are working better than I could have thought. So once I want to basically get a few good signals under it, and with these new configurations, there's slight adjustments to the model, but they're making a big difference. And I'm liking what I'm seeing. So once I have a few good signals like that, then the model will go live.
Boy, they're really crushing UA now. Look at that. That figures. Just to piss me off. But this is probably headed to the 200-day at some point. Wow. Now, my thinking on Apple and Facebook, these are two big stock names. I don't know, I don't think anybody's going to lose their job if they are sitting in these stocks when the market comes down. Apple comes out with earnings, next Tuesday? And at 12 times estimates, I think it can be justified as something to own. So you see, I think money is hiding in it or piling into it. Same thing might be true of Facebook. But my guess is when that's done, you're going to see these things come down. So I think Facebook's got the law of large numbers working against it now. You're looking at a stock that's trading at 73 times estimates and growing at about 20% on earnings. So what's the last quarter's earnings, Dr. K? Were they like 20%? Is that right?
That sounds pretty close. Let me just check real quick.
Well,
yeah, it's 16. 16%.
Yes. So I mean, it's slowing down, and you're trading at 75 times earnings. Can the market really tolerate that if we get into a rising interest rate environment? Which maybe we don't. Maybe we stay in, or maybe we go to negative rates. So, anything else? Let's see. Take a look at some other things on my short sale list. There's Celgene. See how it ran into the 50. I think they come out with earnings any day now. Biogen is turning red. I don't know. I think that might be a short here. What's it? You can see it's starting to roll on the 620. I don't know. That looks like a potential candidate, but it is way down there too. That's where it's at in its weekly chart. So it is way down there. But there's some of these other things I'm talking about. Man, you could have, if you had shorted UA when we started this webinar, you'd have a couple $3 on it, I think. Let's see, what else? What else? People ask about gold. I'll give you my take on gold. I'm a long-term holder of gold. I've owned it. I own a pretty decent position since 2000 when it was trading around and underneath 300, and still hold it because I think it's going higher someday, eventually. But it's still way above where I bought it. But you can see here, you're into this area of overhead, so it's not holding the 200-day. So you really can't get excited about these pocket pivots. It seems to me what you have to do if you really want to buy gold is you buy it when it's down and nobody loves it. When you start seeing the articles coming out about how it's done and it's going to 200 or whatever. I think we saw those right around here. Let's see, any other questions? Somebody says lost audio. That's probably on your end. Market's still trucking higher though. Look at this. It's just kind of like en fuego, as they like to say. Looking around, let's see. How about Gilead? Kind of putzing around. LinkedIn. They come out with earnings, I think, at the beginning of. Now you're at the 200 level. This might, be a short here, but you're not going to get 620 just yet. You're getting some crosses. Seems to be running out of gas up here, but that might be a spot to look at it on the short side. Okay, they started bringing Apple in. It started to break real quickly. And now see how it just kind of flips back to the upside. That's the kind of volatility you deal with on an intraday basis, so not uncommon. Twitter, we're talking about this. This is, I actually bought this in here, got a nice pop up towards 32, and then it gaps down yesterday when Morgan Stanley downgrades it. Not really, to me it's neither here nor there. With earnings coming out next week, I'm not really a player. Intel just keeps going higher, but you had this big reversal pocket pivot. What happened to my, hold on a second. There we go. We had this, not sure how I lost that. This big reversal pocket pivot here, and the stock continued higher from there. I mean, pretty impressive move. I was watching Netflix thinking this thing's going to turn red here pretty soon. It did for a brief moment, but it's hovering at the flat line. It's a weak stock. in a strong market. So that's, they usually, when they're acting like that, they're telling you to short them. Why is the MDM in cash when the market is up 4 weeks in a row? Dr. K, any answer to that?
Yeah, basically, if you look back, you'll see that when you have a lot of volatility in the pattern, and the pre-market pulses and reports we put out have attested to a lot of volatility in the system. So when you have a lot of volatility, that adds a lot of risk. And you don't have to look too far back. You can look at post flash crash in 2010, and then the latter half of 2011, and you see a lot of trendlessness in there, and that's what it looks like, that we've been having right now. Like I said, the Nasdaq's right at the 200-day. Is it going to go through it? Very well could. The model is not going to sit in cash forever, but it's preferable when you have a lot of noise in the system, that sidelines are a better place to be. Just preserve your capital for lower hanging fruit or lower hanging situations when you have more predictability. Now, as far as the volatility model, that's a whole different animal, and that is most likely not going to be remaining in cash for very long, because it tends to capitalize on volatility in the markets. But again, it's just right now sensing a bit of unpredictability at this juncture, but that can change tomorrow. So, stay tuned.
Okay. Someone says, or does it not make, oh no, wait, what is this? In a QE market, would you buy a pivot whose price is below the 200-day moving average? I might. Depends on what the stock is doing, Look at Twitter. Had a pocket pivot here off of the 10-day right here, I believe. Was that it? No, right here. What day was it? Well, right here. But I was actually long the stock before that. You do have a pocket pivot here, and it's under the 200-day. So that would have been one that could have been bought. This thing just keeps on going. Quite amazing. If you're bottom fishing, it really doesn't necessarily make a difference. Some of the best short-term trades have been from under the 200-day moving average when I see a pocket pivot show up. So the furiousness with which this thing is moving higher is just amazing to watch, I have to say. It's such a screwy market, just bizarre. So take a lot of notes. You won't see anything that's weird for a while, but it's just bizarre. Any other questions? I don't really have a lot to say. What am I going to, are you going to buy something here? Look at this SWK right into the 20-day NXPI. Trying to pocket pivot back above the 200-day moving average. There's one you could buy. Earnings come out, though. It's things like MA. These are trying back up at the top of their bases, trying to break out. Visa, same thing, trying to break out. But, these are all breakouts. So I get a little wary. Here's one that was a great short right at the 50-day right here. It's blown apart. And, that's just what this market is. Just short-term trades, whipping around. Everybody piles in, piles out, piles in, piles out. If you're trading in on a short-term basis, you can make some progress, but it's not all that easy. And that's fine, Like I said, if I can just be up this year and we get out of this mess and some trend develops where I can really lay into it, I'll be happy. So somebody just sold a bunch of FB. Look at, let's see. Where? I see the 620 chart. You're talking about that. That's a misprint. I don't know if any. I don't see any huge volume here. I don't see anything. Either way, it's sort of neither here nor there. It's just kind of flitting to the upside. Just watching this thing for some sort of a 620 signal, but I don't really see any volume here. So I'm not sure if somebody sold. I don't know if you're seeing a print or something. What exactly are you seeing there, Ellen? No answer. Okay. let's just kind of cruise. Have I covered most everything I wanted to cover? Gone through all these. AYI, Shop. What about Shop? That was a name that actually was a nice trade in here, from here. And of course, you run up in here towards the top of the base. The thing to watch out for here is double pod. That's what it is now, it looks like to me. The only thing is too thin to too thin to short. So I'm watching this FTNT too. Look at this. We're all running up, and they kind of, you know, when you see this sort of a, okay, this is something I'll watch for, because this could be shortable. Although they come out with earnings, maybe it's good for a day trade. You're running up, and then you get a breakout like this on a 5-minute pattern, and sometimes you can fade those. So if you start to break down through the 6 period, that might be a place to short it. But I would say it's probably good just for a day trade, not for anything more significant than that. But again, this is another erratic stock. It's blowing apart yesterday, and Zoom today they jack it right back above the 50-day moving average. Volume is running above average right now, so who knows? Maybe it reverses, maybe it doesn't. But I keep an eye on that one. It's a possibility if you want to day trade. But in terms of things you're going to buy for a long-term bull market, you know, and I know IBD will milk this because they got to keep subscribership up, so they got to keep people interested in the market, and they'll talk up the bull market and the rally's intact, and you know everything's so far so good and blah blah blah. And I'm not so sure I necessarily agree with any of that. I think it's, you can see what kind of a rally it is. So if it's a junk off the bottom rally, mostly there are some things breaking out, but not a lot. Then that tells you that the quality is probably low. And particularly given the fact that we're at the end of a long bull market that extends back to 2009, it could just mean the market's on its last leg. So, you know, so it's a fluid situation. And there might be a lot of short covering going on too. That's a good point someone asked. Somebody sold at 97.71 on Facebook. Did you see a print? Is that what you're saying? Well, I didn't see the stock break down at all, so I don't even know where that print comes from. That's a false. I think that's a false number you're looking at right there. So look at Furious up 254. I think Netflix is going to roll over for me. They'll do another UA. I don't know. I think it's possible. Like I said, I'm looking at this potentially by the end of the day to be a nice day to make money on the short side, looking to hit this rally. So UA's already been giving me plenty of love, and Netflix is coming in. And I'd like to see it break down and head for the 200-day moving average. So, any other questions? Oh, so you're seeing a print. I don't know. It could be a late report too. So in other words, they reported late. So that goes on, and that's supposedly against the rules, I believe. But you know, these guys all operate outside the rules anyways. So what else? Any other questions before we wrap it up? So you know, I've shown you some things might be shortable. Keep an eye on. I think the Netflix was eminently shortable. This Fortinet might be. Anything that's rallying, and particularly if it's already, you know, had earnings like UA, but you had to get in there this morning or yesterday, and that's about it. So Biogen coming in a little bit more. You can see it's starting to, now you get the 620 cross, so now you're starting to break down. This could come down. It could be good for a scalp. I'm kind of watching for Facebook to reverse here because I think you're just getting a little double top, but we'll see. I know money piles into it when they have to get into the market, but by the same token, they'll pile in, and then once they've piled in, it'll come in. I remember seeing that, I thought, back in here, and then the thing came in like that because it's just like, you see all the volume, it's just like they got to get into this thing, but there isn't enough juice. Notice how this rally now is occurring on much less volume. So even if you did want to test on the short side here, I guess you could use 100 level as a pretty tight stop. It's like 1.5%, so that could work. But it's a little bit touch and go. But we'll just see how the thing closes. So any other questions before I close it up? I don't really have anything to add. So, you know, sorry I can't give you 10 hot new leaders to buy that are going to double from here, but I just don't see it. So that's why I'm leaning towards the short side. We're looking for an opportunity here on the short side. So what are sharing at HGSI? Huh? What do you mean, Scotty? What am I talking about? Well, actually, I'm going to do, has anybody seen the in IBD they have an ad. They're running this ad all over the place. $999 for a home study course showing you how to buy IPOs, which I think is incredibly comical because there's nothing special about buying IPOs. But I suppose if you make it sound like it is, then you can sell people on some overpriced piece of garbage that supposedly teaches them how to buy IPOs. But buying IPOs is pretty straightforward. And you can use HGSI to identify IPOs that you might want to be looking at. And I'll be covering that. And then I'll also be covering how the short side played out back in August. And what names worked and what the setups were, and how it all confirms all the work that we've done on the short side and that was showcased in the newest book, Short Selling with the O'Neill Disciples. So that's going to be the gist of my presentation on Saturday at the HES Investor Conference. But for the most part, I don't use Wanda or any O'Neill products anymore at all. Pretty much useless, I hate to say. And HCSI, I think the advantage there is that the system is not wedded to a particular method. So, all of O'Neill's stuff is wedded to CAN-SLIM. And HCSI also has all these indicators and different things you can use and employ, and also visual indicators on the charts. If you look at this is my intraday chart that I monitor during the day on the site. You see there's a lot of cool stuff on there. If you like colors, it's got plenty of colors for you. If you like lines, a lot of lines, shading, got some blue shading, got some great, isn't that pretty? Got your volume readouts over here. And all of this stuff for me is visual. So when I'm cruising through charts, I'm looking at things visually, and I want to go through them fast. And this I can actually just read this sort of as it is and pick up patterns that way. So that's what I like about HCSI. It allows you to be creative. And I think I've said this before. I think in an environment where a lot of the action is being run by machines, the only advantage we have as human beings is our creativity. And I think that's what HCSI allows you to do. So on that note, I have nothing else to say. Some of that's in short Tesla. If you have to ask me if you should short Tesla, then you probably shouldn't even be shorting anything. I don't see it in any position. There's no 620. It's just down here. You had to short it at the 200-day. So if you're asking about shorting now, maybe you could get away with it. Maybe maybe these four little lows here create some sort of overhead resistance on a short-term basis, and it's going to come in. I don't know. Maybe, maybe not. But figure it out. Because if you're going to short, you better be able to figure these things out for yourselves. If you're sitting there waiting for someone to tell you what to do, I don't recommend that. Anyways, that's all we've got, you guys. Thanks for showing up as always, and we will catch you next week. Have a great weekend.
So long, everyone.